Good day Forex trader. Euro USD, 1.1286. Despite Euro's decline from last week's high at 1.1360, Thursday, to 1.1235 on Monday, subsequent rebound to 1.1303 and yesterday's retreat from 1.1302 to 1.1261 suggests daily choppy swings inside recent January 1223 to January 1360 range would continue with downside bias, but below lower level is needed to head towards NOV's 1.1187 bottoms later this week. On the upside, only a daily close above 1.1303 risks a stronger gain to 1.1325, but reckon 1.1345/50 should cap upside. Euro/USD, 1.1286. Despite Euro's decline from last week's high at 1.1360, Thursday, to 1.1235 on Monday, subsequent rebound to 1.1303 and yesterday's retreat from 1.1302 to 1.1261 suggests daily choppy swings inside recent January 1223 to January 1360 range would continue with downside bias, but below lower level is needed to head towards NOV's 1.1187 bottoms later this week. On the upside, only a daily close above 1.1303 risks a stronger gain to 1.1325, but reckon 1.1345/50 should cap upside. Intraday market moving news and views. Euro/USD, 1.1278. Euro moves relatively narrowly in subdued Asian morning after Tuesday's lackluster session. Despite staging a strong rebound on MON FM 1.1235 to 1.1303, Euro met renewed selling at 1.1302 in European morning and retreated to 1.1261 in New York morning before staging a short covering bounce to 1.1295 in Asia. Although sideways swings are likely to continue as traders await more market news to drive the euro in either direction, as long as 1.1303 holds, price would remain confined inside January 1223 to January 1360 range with downside bias. Offers are tipped at January 1295 to January 1305 with stops touted above there, while bids are noted at 1.1265 to 60 with stops below there. More stops are reported below 1.1220. Data to be released on Wednesday. Australia Westpac leading index. UK GDP, France producer prices, Italy trade balance, UK current account, MBA mortgage application, GDP, PCE prices, National Activity Index, consumer confidence and existing home sales. Gbp Usd Forex signal, range-bound ahead of US data. The pair will likely remain in this range today. Bullish view. Buy the Gbp USD and add a take profit at 1.3350. Add a stop loss at 1.3150. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3220 and add a take profit at 1.3160. Add a stop loss at 1.3300. The Gbp USD moved sideways as investors reflected on the rising number of Omicron cases and the measures by the US and UK governments. The pair is also moving sideways ahead of the latest US consumer confidence and UK and GDP data. It is trading at 1.3250, which is above the key support at 1.3195. COVID concerns remain. The Bank of England, BO, met last week and sounded relatively hawkish. The bank surprised investors by hiking interest rates by 0.25% and hinted that more hikes will come in the coming year. It justified the rate hike by arguing that it was necessary to curb the rising inflation. A few days after the first pandemic-era rate hike, there are concerns that the UK economy could experience a major slowdown. These concerns are mostly because of the rising number of COVID-19 cases in the UK. The most recent data showed that the country had more than 91,000 cases on Monday. As such, there are concerns that the Boris Johnson administration will move to announce fresh lockdowns after Christmas. According to The Telegraph, the government is considering £6,000 grants to businesses affected by the new restrictions. In the morning session, the UK will publish the latest UK GDP data. Economists expect the data to show that the country's economy expanded by 1.3% in the third quarter. This growth translated to an annualized growth of 6.6%. These estimates are based on the past two releases by the Office of National Statistics, ONS. The Gbp Usd pair will also react to the final estimate of US GDP numbers that will come out in the afternoon session. Based on the November estimates, economists expect the data to show that the economy expanded by 2.1% in the third quarter. The Conference Board will also publish the latest consumer confidence data. Gbp Usd Forecast. The 4-hour chart shows that the Gbp Usd pair has been in a tight range in the past few days. The chart shows that the pair has found a strong support at 1.3195. The pair is trading along the 25-day moving average. It is also between the middle line of the Bollinger Bands, while the Relative Strength Index, RSI, has moved to the neutral level of 50. Therefore, the pair will likely remain in this range today. The key levels to watch will be the support at 1.3195 and the resistance at 1.3350. Aud USD Forex signal, relief rally to fade as bears I 0.700. The outlook for the pair is bearish and there is a likelihood that it will slip below the support at 0.7088. Bearish view. Set a sell stop at 0.7085 and a take profit at 0.7000. Add a stop loss at 0.7100. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7150 and a take profit at 0.7250. Add a stop loss at 0.7050. The AUD USD price held steady on Wednesday morning as investors reflected on the latest minutes by the Reserve Bank of Australia, RBA. The pair also reacted to the rising number of COVID-19 cases in the United States and Australia. It is trading at 0.7140, which is slightly above last Friday's low at 0.7082. Rising COVID cases. The AUD USD pair rose after Australia's Prime Minister, Scott Morrison, ruled out new COVID-19 lockdowns even as experts expect numbers to rise. While the number of daily cases has declined recently, some experts expect that the daily number could increase by about 200,000 per day in the coming weeks. The estimate was from the Doherty Institute. If this happens, more than 4,000 people would need hospital treatment and about 8,000 people will be admitted in intensive care unit, ICU. The pair also rose after the latest minutes by the RBA. The minutes showed that the base case for the bank is that it will end its quantitative easing, QE, program in May next year. The other option is that the bank could scrap the QE program altogether in February depending on economic numbers. Also, the bank hinted that it will taper the asset purchases in February's meeting and then wind down the asset purchases in May. The next key catalyst for the AUD-USD pair will be the latest U.S. consumer confidence data by the Conference Board. Economists expect the data to show that confidence rose from 109.5 in November to 110.8 in December. Still, with the number of COVID cases rising, there is a likelihood that confidence will retreat. The pair will also react to the final reading of the US GDP data. Economists expect the data to show that the economy expanded by 2.1% in the third quarter. Still, the impact of these numbers on the pair will be relatively muted. AUD USD Forecast. The 4-hour chart shows that the AUD USD pair declined to a low of 0.7088 on Monday. This was an important level since it was also the lowest level on December 14. The pair bounced back and is trading at 0.7140. It has moved to the 25-day and 50-day moving averages while the Relative Strength Index, RSI, has moved above 50. Still, the outlook for the pair is bearish and there is a likelihood that it will slip below the support at 0.7088.